And
Fair.
again, that's what makes
Yeah.
it super interesting, both from an investment and also from a larger philosophical standpoint of this is a ant colony hive mind building out a financial future where no one person has a say. I mean, it's incredible.
Definitely, and I think that's also why it's hard to fault even the quote unquote toxic Bitcoiners that a lot of people like to claim they are, because the Bitcoiners, and to your point, like there really is no community. We're all just like a bunch of random strangers that are interested in different public infrastructure technologies that like to rant on Twitter. So I definitely think that there's a kind of there's value to like to detaching yourself emotionally from these networks, and that's something I massively respect in what you're doing as an investor.
I've spent a bit of time looking at investigating why people react the way they do on social media, and it's never for the reason you think it is. I had this once. I got involved in anti-climate change Twitter. And I actually singled off a few people to have a conversation. Like, what is it that you actually fear? Why will you not take Pascal's dilemma? Why will you not think that the upside of less pollution and greening takes away the catastrophic downside? Why would you not take that bet? And the answer came back from many people is, we don't want our gas prices to rise, and we don't want them to increase our tax on our petrol. So what it was actually an economic situation that has spilled over into a philosophical situation. And I think we'll probably see the same in Bitcoin, where many people have got into that network, they believe in it as their store of money, and they don't like it if it gets threatened because they don't have a lot of money. And it's terrifying to them, and rightly so. And I get it. I understand why emotion spreads so much, particularly when it's a network that you own a part of. So it's a really complex psychological thing, as well as an economic thing, as well as a financial thing. They don't even need to do that. Yeah. They just need to not insult other people. You don't create network participation and a thriving network by insulting people who don't share your view. That's been proven time and time again.
I'd argue though that Bitcoin wouldn't be affected by any insults that
it is, because it's all about network growth. It's provable. And if you don't grow the network, then the value of the network is less.
I think it depends on where you're seeing network growth. I think Bitcoin has settled more value than it's settled ever. We're seeing adoption. I don't think El Salvador looked at Bitcoin maximalists as an impediment to adopting Bitcoin as legal tender. I don't think my father who's in Morocco, cares to look through Twitter. He just looks at Bitcoin as a fixed supply asset.
Because Metcalfe's law would state that it's the number of connections on the network and the interconnectedness, right? Bitcoin has an issue with the interconnectedness because it doesn't use smart contracts as yet. So you're creating less interconnections between the network. It has some giant network participants, but networks aren't driven by the single large participants. It's driven by the whole thing. So what you've got to look at is what is the user growth and the transaction growth on Bitcoin versus other chains. And you'll find that it was more lackluster than others over the last 12 months, and hence why it underperformed. So the macro environment is, I think, why we're seeing volatility right now is the shift of narratives. Markets don't like that shift. So the narrative was the inflation shift. The inflation shift last year, I think what happened is inflation was real, and inflation destroyed marginal spending and marginal investing. And I think we've seen it in meme stocks. We've seen it across the market. We've seen it in cryptocurrencies where the marginal investor got marginalized because they didn't have enough money. So I think that was one of the features of what happened. And the bond market was pricing in some more inflation, but not a great deal. However, that narrative is shifting. All the forward-looking indicators I look at look like both growth and inflation are slow much faster than the market expects. So then they're struggling to think, how do we price growth equities? How do we price other types of equities in that shifting environment? Because we're going to have a period of time where growth is slowing and inflation is going to look high, and then inflation follows because inflation lags. So I think we're at a shift. My general view, and I've held this for a while now, is that the central banks are more likely to get away with one hike, two hikes max, before they're looking at stimulative measures again, because I don't think the economy has got traction, and we don't know what the true traction is of the economy until maybe 2 years, 3 years after the pandemic recession has followed through. That's very typical of every recession I've ever followed, is basically there is a growth slowdown that comes fast afterwards. The market panics, starts talking about recession again. Usually that doesn't happen. There's generally more stimulus. So I think it's very supportive of crypto prices overall. I think crypto's gone through that transition phase. We saw the marginal spending, investing in crypto go down. I think now all I'm doing is speaking to large institutions about investing. So I think the ongoing investment thesis continues. And I think that the central banks will be more dovish than people expect going forwards. So we should have a longer cycle with more tailwinds than most people expect right now.
Get your thoughts there on how that might
So
evolve.
look, everything is a risk curve. Every single part of the investable universe, and crypto is part of that risk curve. Sometimes it's correlated, sometimes it's not. When you go to a macro shift, everything gets a correlation of 1.
Right.
And we've seen that. So it periodically correlates and periodically decouples, depending where we are on the risk curve. It tends to be really decoupled in that mid-cycle phase where growth is okay, central bank policy is loose, crypto does its own thing. But it's when people are having to bring cash back, let's say you're a hedge fund, you've now got a mandate to invest in crypto, you've got, your equity position blowing up, you need to reduce risk, the risk manager taps, as volatility rises, VAR means you reduce your portfolio risk, so you're selling crypto, even though you don't want to. It's a function of risk markets. We won't get around that ever, because everything is the same, unless it's got no mark to market, which is why people like VC and people like real estate, because there's no real-time mark to market. But I think the correlation, crypto looks more like a currency in terms of its correlation, which is known as Bayesian in distribution, which means it has passing correlations that shift always. And crypto does that because it's correlated to the bond market, it's correlated to the equity market, it's correlated to something else. And it comes and goes, and sometimes zero correlation.